it's not a surprise that we're facing some serious challenges with TPD, sustainability in particular, and directly related to that is the increase in mental health claims that we're seeing in the industry. I think Callie released an article over the recent months that a third of all TPD claims are now in relation to mental health. And I think from a criticality perspective, that's the most critical thing that we're facing at the moment in relation to sustainability.
So that would be one contributor, one example of why the regulator has issued this open letter to insurers?
Absolutely. I think there was a lot that was addressed in that letter. So there was the previous labelling that we had on premiums, so level and stepped, obviously, and that we needed to address that and make it more clear to consumers what we meant by those types of premiums. But then sustainability in general is obviously a key focus right across the industry.
Sure. I would say that it has been for quite some time. So before TPD, there were sustainability challenges with our income protection products, to the point that a regulator had to sort of intervene and tell the industry how to design the product. And now it's TPD. So I kind of have to step back a little bit and go, well, where do we start? We have to start with the consumer in mind, and what are we insuring people for? Like, what is the need that we're meeting? And it's absolutely very valid, very critical need for have insurance as an underpin for society, a safety net. But that insurance can only work and be sustainable and be affordable and accessible if we kind of take it back to really boring first principles and think about how aligned is our product design to some of the principles of what can be insurable. And there's two big things that stand out to me, that probably stand out to us in relation to TPD sustainability. The first of those is the need for insurance to indemnify, not overcompensate. So really compensate for losses incurred, not any more than that. And the second is for insurance to be for events that are outside of people's control, that are random events. And where you've got things like mental health and other subjective conditions, for example, pain, those don't fully align to those principles.
Okay, so we're going to be talking as we go through this conversation a little bit about the level of the insured benefit indemnifying the policyholder, not being a windfall necessarily, and that's something that Jen Reid brought up in a paper a little while ago, and we'll cover that. But I'm interested in your reflection about moving back towards first principles. Do you have any sense about how the industry has moved so far away from first principles in the first place?
That's a tough one.
Sorry.
No, it's something we all need to ask ourselves a bit as manufacturers in the industry, I think. And look, as an industry, I think we are quite focused on meeting consumer needs, and we've developed products to meet those needs in a certain environment many, many years ago. And then societal expectations, medicine has evolved, and our products just kind of haven't kept pace.
Yeah, that makes sense. You develop a structure and a system for one particular community, and that community has evolved and is changing, and therefore it would perhaps follow that the life insurance sector needs to evolve and change in line with the changing community. Okay.
That's much better words than mine.
Okay, thank you. That's nice. If we hand over to the reinsurance colleagues in this conversation to get your take on what you've heard so far from Tim and Joanna with regard to how we got to this point.
Yeah, I mean, as you mentioned, Jen Reid's paper picked up on one particular point, which is the indemnification point, and the fact that we've ended up in a situation where with all good intent, you issue a TPD policy to someone who's, say, 40 years old, that is there to indemnify them against the potential that they're going to lose 25 years of income and have a huge mortgage to pay off, and have kids at school that need to be paid for. And then 20 years later, those needs have largely gone down, that the risk of losing 5 years of income is obviously less than the risk of the problem of losing 25 years of income, and yet we've indexed there some insured on the way through. So some insured is going up, the actual need is going down. There's an incentive to claim. The benefit is more than the loss. Okay,
so there's a case to be said that perhaps If we're talking lump sum contracts, for TPD, the benefits available are perhaps too attractive.
They don't start out that way, but I think they emerge that way over the course of the policy. So I think, you know, underwriting and the rest of the process makes sure that the initial sums insured are, you know, aligned to what the need is, but the product construct doesn't track that over time.
Okay, David, what do you think about that?
Yeah, no, I absolutely agree with what's been said so far, and I think, you know, the big question we all need to address is this principle of indemnity. And if we, you know, we can look across obviously IP, TPD, you know, even trauma. I think with IP, with all of the work that has been undertaken in the industry, largely, you know, at the instigation of the regulator, you know, certainly the principles of indemnity, I think, apply much more clearly to the IP product now, less so to TPD. But I don't think we can look at TPD and IP in isolation. We really need to look across those product groups to ensure that the principle of indemnity still holds up when you look at it across both IP and TPD. So again, it kind of, I think, raises the question, you know, if we really step back, what is TPD insurance for? What are you trying to cover? Is it covering some of the things that IP already covers, or is it a separate solution to perhaps assist with you know, lifestyle changes or home improvement changes that are required as a result of an unexpected accident or incident or illness? So I guess what is it really trying to cover, I think, is what we really need to get to the bottom of, and then really understand that interplay between IP and TPD from a you know, from an indemnification perspective, because obviously whatever's been indemnified has a big impact on the affordability and ultimately the sustainability of these products.
Okay, so you mentioned the notion of sustainability needs to be applied across all product types. But the nature of this conversation so far is really almost automatically focused onto TPD, noting that income protection, there's already been an intervention from the regulator, and that's being played out at the moment. So it seems when we're talking about sustainability, the first thing that top of mind is TPD as opposed to any other product type. Is that reasonable?
I think it's certainly the current focus, but as I said, I think, you know, when we look at TPD, one of the other areas I think we should really delve into as an industry is how do we actually underwrite that in terms of from a financial underwriting perspective? Like, how do we assess the need for what we're trying to cover? And again, that needs, in my view, needs to go across both IP and TPD together. So from an underwriting perspective, as we look to financially underwrite these products, looking at each of those in isolation, in my view, kind of goes against, you know, that getting that clear view that the principle of indemnity, you know, holds fast.
Okay, so financial underwriting of TPD, of course, that wouldn't have happened in the 60s, say, when it was initially evolving in the Australian market, when it was ostensibly an offer to cater to blue-collar workers. But obviously the world is different today with white-collar workers and the emergence of mental health illnesses, which we will cover later in more detail. But so if I'm listening to you correctly, David, you're talking about perhaps more financial underwriting emphasis on underwriting TPD?
Correct. But, you know, obviously, as I said, what we're kind of focused in on right now is TPD, but, you know, from a sustainability perspective, I think other product types such as trauma can't be necessarily, it may not be the focus right now, but it can't be ignored either. Particularly for trauma, you know, there's such fast advances from a medical screening perspective, you know, to keep abreast of that, so that, you know, these kind of increased capability when it comes to screening for certain illnesses, which can then have a knock-on impact on increased incidence of claims, etc. I think that whole area needs to be, you know, focused on as well. So it's not just TPD. I think ultimately there are other product groups that need to be addressed as well. Trauma being one of them, but I agree right now, kind of TPD in terms of some of the large sums assured that we're seeing, the perhaps issue of indexation that Matt just mentioned, and also I guess the challenges we face in terms of managing kind of mental health claims in the TPD space probably make it right to focus in now more so on TPD. Okay, but I think we shouldn't lose sight of some of the other product types as
understood.
well.
certainly one of the things that we've seen over the last 10 years when we've done a bit of a look back as an industry to see what are the trends and what's happening with claims. The rise of mental health claims is something that has happened in the last decade and is a significant shift in terms of customer behaviour and how we're supporting Australians when they come to us to make claims. And what that is meaning is that where insurers before and for many decades have provided support in TPD, typically for physical causes of claim and often for blue-collar workers, we're now seeing in year 2025 a lot more claims from white-collar workers for mental health claims. These are things that we weren't expecting to come through. We'll always exist as an industry to pay out claims, and we're here to help people when they can't work. But with such a significant shift in terms of the overall community health, and so many Australians now experiencing mental ill health in their lifetime, it is the right time to be having the discussion about what's the right and appropriate support that we can have as an industry, where we're having meaningfully affordable and accessible insurance for the long term. So in Australia, what we know is 43% of people will suffer a mental health condition in their lifetime. And right now, today in Australia, there's about 800,000 people who have a severe mental illness. Of those people, the Australian Institute of Health and Welfare would classify about 300,000 of them of having a permanent incapacity from that mental health condition. But the vast majority, the other 500,000, are suffering from a more episodic condition. So they might be very unwell one day or for a series of days, weeks or months, but they have periods of feeling quite well. And when we look at that and we understand what's happening and making people sick, to your question around does that mean the products are fit for purpose? Well, total and permanent disability insurance makes a lot of sense for what it was designed for, thinking about blue-collar workers particularly, people who were at risk of experiencing injury and other forms of illness, particularly from their workforce, or just happenstance as life happens, where bad things can happen out of the blue. And a product like that should always exist. There is certainly a need to have total and permanent disability insurance. I think that the conversation that I heard was around, is it fit for purpose when it comes to things like mental ill health, which can be more episodic in nature?